So, let's talk about Fiserv. You've probably used their technology dozens of times this week without even realizing it. They are a massive, massive player in the financial tech world. But lately, this quiet giant has been at the center of a pretty wild story, one of collapse, chaos, and a huge debate about what comes next.
Okay, let's just get right to it. This is the number that just sent shockwaves through the market. Negative 45%. And get this, that isn't a year's loss, or even a quarter's. That's how much value Fiserv's stock lost in one single day.
And that's exactly how one financial publication put it. A total dam break. Now, for a company that processes trillions, with a T, trillions of dollars in payments and helps manage over 1 billion bank accounts, a collapse like this is it's almost hard to believe. It was literally the worst day in the company's entire history.
And that is the big question we're going to dig into right now. What could possibly cause a titan of the industry to fall so far, so fast? We are going to peel back the layers on this crash, look at the warning signs that were flashing, and dive into the fierce debate that's raging right now over whether this is the end of an era, or maybe, just maybe, the beginning of a historic comeback.
So let's start with the anatomy of the crash itself. To really get what happened, you have to look at the one single event that finally broke the dam.
The trigger, the thing that kicked off that 45% plunge, was the company's third-quarter earnings report. Now, investors were expecting, solid growth. Instead, what they got was a complete bombshell that just shattered their confidence in the company's leadership and its future.
And just look at how brutal this guidance cut was. It's pretty shocking. You can see Fiserv didn't just trim its forecast a little bit. No, they took a sledgehammer to it. They slashed their full-year earnings outlook by nearly 20%, and they cut their revenue growth forecast from a really healthy 10% all the way down to just 3 or 4%. For a company this big, that is a 5-alarm fire.
But here's the thing, a collapse like this almost never happens in a vacuum. The truth is, the warning signs were there for months. First off, growth in their key Clover platform, that's their all-in-one payment system for small businesses, and it's supposed to be the real engine for their future. Well, that growth was slowing way down. At the same time, the company got hit with class action lawsuits claiming they'd basically misled investors about how well Clover was actually doing. And then, there were the operational meltdowns.
And this quote from a bank employee on Reddit, wow, it just perfectly captures the real-world damage from one of Fiserv's huge system outages. The technology that millions of people rely on was failing over and over and often on paydays. We're talking ACH transfers, Zelle payments, even core banking systems just going down. It was destroying the trust that Fiserv had spent decades building. So, while Fiserv was trying to put out all these fires internally, the battlefield outside was getting more intense than ever. And that brings us to the second key part of this whole story, the battle of the fintech giants. This isn't just about one bad quarter. This is about a company fighting for its life in a war that is changing super fast.
You see, Fiserv is part of the old guard. They're a legacy player that has dominated payments for decades, protected by what investors like to call a moat, a really strong competitive advantage. But right now, that moat is being attacked from all sides. On one flank, you've got these new, super agile tech-first companies like Block and Adyen. And on the other, you have the biggest titans in the world, Apple and Google, moving aggressively right into their territory.
And this right here is a perfect example of the existential threat we're talking about. For years, a huge part of Fiserv's business was selling the hardware, the little terminals you tap your card on. But with Apple's Tap to Pay, any iPhone can become a payment terminal. Just think about that. This one feature could make a massive chunk of Fiserv's entire business model totally obsolete. So, this brings us to our final section. Is there an opportunity in all this chaos? After that historic crash, Fiserv's stock is trading at multi-year lows. The company is wounded, the wolves are circling, but this has led some investors to ask a very different question. Is all this chaos actually a once-in-a-generation buying opportunity?
This is the key question for what's called the bull case. That's the argument that the market has totally, massively overreacted, and that Fiserv is now, as one German analyst put it, spot billig, which, it basically means dirt cheap.
And the heart of their whole argument is this number, around 13. That's Fiserv's price to earnings, or PE, ratio after the crash. In simple terms, that's like a price tag for the company's profits. And a PE ratio that low is usually saved for dying companies, ones with zero growth prospects. And yet, Fiserv is still a massively profitable business.
So the argument from the bulls is this. Look, forget all the noise for a second. The fundamentals here are still incredibly strong.
The company is a cash cow, generating billions in free cash flow every year. That's the actual cash they have left over to keep. Its profit margins are fantastic. Management is so confident that they're buying back huge amounts of their own stock. And yeah, growth has slowed, but they are still growing.
But the bears, the people betting against Fiserv, they see a completely different picture. They argue that those strong profit margins and that huge cash flow, well, that's all in the rearview mirror. Why? Because intense competition is going to squeeze those profits. They think the core technology is becoming obsolete thanks to threats like Apple, and that the reputational damage from the outages is a permanent stain that could cost them huge clients. And that's all before you even think about the massive unknown cost of those lawsuits.
So we're left with two completely opposite ways of looking at the exact same set of facts. One side sees a wounded giant on sale, the other sees a dinosaur just waiting for the asteroid to hit. Which brings us to the final critical question.
So is this a chance to buy a financial titan at a price we might never see again? Or is it a classic value trap, a stock that looks cheap but is only going to get cheaper? The answer really depends on whether Fiserv can navigate these huge challenges and prove that this old guard giant can still compete in a brand new world.